Well, I think the very heart of it, and this is what we look for in all businesses, but it seems to have been more enduring in brands in general than most, is the ability to enjoy price inelastic demand for your product. That's really it. And then the regular consumption, the kind of predictability of a business that's blessed by having brands that are part of one's daily life. One being the broad sense for the consumer, means that you have a very predictable model from which you can invest and build capacity. I once flew across the country with a person from Toshiba, and he was involved with the sale of their notebooks and their laptops. And I told him I just met with Hershey, and I was excited about Hershey at the time for whatever reason. Clearly, it's a core portfolio of strong brands. And he said, "Why would you ever invest in Hershey? I mean, what's the point?" And I said, "Do you realize if you owned Hershey 100% yourself, you'd wake up on January 1st each year, and you'd have a pretty good idea exactly how many bars you're about to sell for the following 12 months. Within 1 or 2%, you could get it right." And I said to him, "What do you think the chances are you could know by year end how many Toshiba laptops you're going to sell?" And he said, "I don't have a clue." And in order to sell them, basically, they're probably going to do quarter end incentives to make sure they make the numbers and all the rest, and basically incent the consumer to try to buy them. In the case of a brand, that loyalty that's embedded in the memories that people have of pleasant times associated with powerful brands for their lives growing up, gives them a real stickiness. And that stickiness has surprised me as a global investor because, when, for instance, the walls went down for China and for Eastern Europe, trademarks that had been dormant for decades sprung back to life. A friend of mine escaped from Romania in the early 1990s after the wall went down. And his mother went to Paris to meet him. And they were trying to get a train to Deauville. And he didn't have tickets, and it was sold out. And the mother said, "Don't worry, son, I'll take care of this." And she went to the ticket head, and she pulled out a box of Kents that she had in her purse probably for 20 years. And she gave that, and she put that box of Kent on the passageway before the teller, and she looked at him like this, thinking that would part the sea. Well, the fact is, in Romania, for most of the time of communism, Kents were a form of trading value. They weren't smoking cigars; they were trading cigarettes, not smoking cigarettes. And the brand meant something, and it had a currency, and it stood for stature and standing, and something that could be trusted. Now, when the wall went down, of course, Kent was immediately the brand of choice until, over time, the consumer realized that it had become a bit of a backwater. And in fact, what they had long remembered as having been the most powerful brand in the world had slipped. And they then at some point had to recalibrate as to whether it carried the same value for them emotionally and positionally as it had historically. But their memory was lasting. And that the durability of the brands are what has really impressed me over time. And what you can do with that. I mean, you start with the basis of knowing that your core demand will wake up every morning and likely have, within reason, a very similar day than the day that was before and the day that will be afterwards. And you can plan around that business with so much more certainty than ones where you're really at risk the change of your business on a daily basis.